Hello traders and welcome to another video review. Today is Monday, August 18th, 2025. Let's take a look at the economic calendar for today. Overnight data were not really interesting for the financial markets. We are waiting for the trade balance data from the Eurozone, scheduled for this at 11 o'clock. And then we have the housing starts and foreign securities purchases from Canada. This data are scheduled for this at 2:15 and 2:30. That's about it. The medium and very important data for the Monday. So without any further ado, let's just start looking at the charts. We start obviously with euro dollar. So the 4-hour time frame chart of the euro dollar doesn't actually looks busy these days. We got an attempt to break or test the level of 1.1731, but at the level of 1.1716 the market has been capped and right now just reversed lower. The momentum remains positive, remains quite strong, 56 points. Nevertheless, the market is stuck in this narrow zone, trading sideways from the technical resistance down to the technical support, roughly around the 100 periods moving average at 1.1615. So we are waiting for a breakout in the euro dollar market. As you can see, we retraced pretty much I don't know, 78% of this swing down, right? Nevertheless, there is still no attempt to rally towards the swing high located at 1.1818. So we're still waiting for a breakout on the euro dollar. British pound, on the other hand, the British pound looks quite heavy these days. The market have a problem with the top for the wave B. So we got this pretty nice impulsive market movement towards this level, the wave B high. So wave B high is 1.3587. Nevertheless, there was an attempt and then the second attempt to break above this level, and both failed. So right now bears are slightly pushing higher, pushing more for the market to push it below this level. 1.3522 is the short-term technical support made on the August 14th, and this is the next target, short-term target for the bears. Any breakout lower below this level would likely end up with the situation when we are testing the 1.3474 or 1.3461. We might even test the 100 periods moving average, which is quite lower at 1.3398. Momentum is string positive, however, not strong, 56 points. So not too bad, not too well. Nevertheless, we are still waiting for the continuation of this upside movement, because after the ABC correction is done, now the preferred market movement is to the upside after the ABC correction is completed. US dollar versus the Japanese yen is still below the 100 periods moving average at 147.91, trading sideways after the clear breakout below the trend line. And then, as you can see, bulls were fighting for this trend line like no tomorrow. Nevertheless, for now they failed, and they basically let the bears to push the market towards 146.23, very close to this low at 145.87. right now momentum is neutral, is spot on the level of 50. And there is something interesting going on here, because we might find, let me just go back on, we might find some sort of the head and shoulders pattern. We might have this left shoulder, head, and the right shoulder. So I won't be surprised if the market would continue to the downside. We still have our scenario to the downside ready, waiting for the completion. Right now we are a little bit stuck in between the levels. Nevertheless, the volatility these days is not really great. So after the breakout below the trend line, a little bit more of the control is on the bears. Bears are pushing this market lower, but they don't have too much momentum anyway. So despite the fact that they are pushing the market lower, the market doesn't actually react very strongly. Volatility, as you can see, is limited. So we are waiting for the movement to the downside to kick in. US dollar versus the Canadian dollar, as you can see, is looking quite nice. We got this local swing high located at 1.3878. So that's the technical resistance, and we got obviously this technical support at 1.3574. In the meantime, we managed to retrace at least 50%, so we established local technical support 1.3720, and since then the market is trying to move higher. Nevertheless, it doesn't actually look that well. We broke above 1.3809. Nevertheless, the local swing high was made just here at 1.3818, so only 9 pips away, and the market is now reversing a little bit. Lower momentum is at the level of 56 points only, so neither bears not bulls have the total control of the market, but the bulls are much more keener to push the prices even higher towards the August 1st swing high at 1.3878. So outlook for the US dollar versus the Canadian dollar is looking quite good for the market. It's looking bullish, so possibly the breakout above the swing high might kick in another round of the very strong momentum to the upside. Otherwise, we will keep bouncing from the 100 periods moving average, trying to move higher. Nevertheless, this bounce is not made in an impulsive wave. This is more like an overlapping, complex, time-consuming structure, which is very, very typical for the corrective cycle. At the beginning of the new trading week, the S&P 500 market, the US market, is basically trading a little bit away from the swing high at 6,485. So this is our technical resistance. We are testing this level here, and markets are very, very keen to see what's going on, what will happen when we break below 6,437. So we will mark it as the technical support. We've been through many of the corrections, basically pullbacks before, so that might be another pullback this time. Another pullback from the extremely overbought conditions from the new swing high. Nevertheless, the biggest correction here on this market was I think this one will be the biggest. So that was 1.43%. So any movement below 1.43% is basically the overbalance of price and time, and we might see some further movement even lower, most likely towards the 100 periods moving average located at 6,382 points. The outlook remains bullish. However, the market is a little bit tight, and it needs some sort of the room to the downside. And last but not least, let's take a look at the Bitcoin. The Bitcoin failed to rally after the new swing high was made at 124,517. We broke back towards the this demand zone at 115,000. We broke below this level. Even the local low is 114,954, which means we are way below this trend line. So we will remove it, and we are back to this demand zone. Nevertheless, it doesn't actually look like this demand zone is helping whatsoever. Those red lines here is the demand zone. If the bearish pressure will be that high, sooner or later we're gonna test 111,920 swing low from the August 3rd. And for now, if we switch to the weekly, look at this. The weekly is starting to look ugly. The weekly is starting to look ugly because we have the first rejection on 123,000, second rejection of 24,000, 25,000. Nevertheless, is the same basically level. So let me just copy this. We got two pin bar doji candles here. We got those two candles, weekly candles, very, very strong candles, indicating possible big correction on the Bitcoin. The last correction, that was a big one, nice one on the Bitcoin, were in January, and we went minus 32%. For now, it doesn't actually indicate that deep correction. Nevertheless, we got a message from the market. We are overbought, extremely overbought. We're coming off. Possibly next target would be obviously 111,920, and if this one is violated, then the lows of 100,000 will be tested. And the other market we need to tell a little bit about is the Ethereum. Let's start from the weekly. As you can see, we made the wave free top at 4,789. We reversed lower. This week starts on the lower node. We hit extremely overbought conditions. This is a good time to take some. It looks like a good time to take some profits off the table on this market. We got a few indications that are saying that maybe this is bearish divergence here, as you can see, resolving from the extremely overbought conditions down towards 59 points, and we have another movement to the downside. This is divergence between wave this swing high and this swing high. So the wave 4 corrective cycle has started on the Ethereum. As you can see, we're grinding lower step by step, little by little, but this is what we've been talking about. And right now this situation looks something like this. As long as we are below this trend line, the outlook remains bearish in the short term. We just hit the lower channel line, so we are moving inside the downsloping channel. There is still room to the downside here on the Ethereum. There's still room to the downside to test at least the level of 4,087, 4,100. If not, even the 3,937 might be tested. The market is looking bearish. However, this movement to the downside is as well some sort of the corrective cycle to the downside. So when this corrective cycle is done, market should make another wave to the upside, wave 5. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.